And welcome to For Action Takers Only. This is a podcast for serial entrepreneurs and real estate investors and anyone taking action living the life they intend to. My name is Todd Kirchhoff and I'm your host. I started this podcast as a homework assignment to network with other like-minded individuals. So if you like what you're hearing here and you like what you're seeing here, please subscribe and like and do all that stuff, and we could use the support. Tonight, I got on Dan Grove. He is from Baltimore, Maryland. He is a ICU and lung doctor that has become a real estate investor, and he is a member of the SubTo community. Also, a father of five. So I'm intrigued on how he's doing all this. So I'm going to bring him on in and see what he's got to say.
How's it going?
How's it going, Dan?
I'm doing good. I'm doing good. Wow, you make me sound very busy.
Well, you do sound busy. So ICU and lung
Right.
doctor. Huh? How long have you? So that's your career. I take it. That's what you've done since probably high
Yeah,
school,
I guess it depends on when you start counting, right?
right?
Yeah, it's a W-2. I call it. I think it's a
So,
W-3. I don't know. It's pretty busy.
so you
I
still doing
am.
that right
Did it
now? Then,
today.
jeez. So what kind of hours does that entail?
So it depends. I do both lung disease and ICU. When I'm in the ICU, it's a 12-hour shift. So I do those. I probably work maybe 50, 60 hours a week on average, maybe.
50,
Yeah.
60 hours a week. That's pretty demanding. So, you're a big time ICU and lung doctor. You're already making big money. What drew you to real
Yeah,
estate investing?
so I was part of a private practice, and our practice, I was a kind of coming up the ranks. I was a junior partner, and our practice had a lot of side businesses that I enjoyed being a part of. We had a billing company and a collections company. We had a company that provided sleep apnea equipment like CPAP machines, and then sort of the height of the pandemic, the hospitals that we had a contract to work for, we had a contract to work in one of the big hospital systems in Baltimore, and they sent us an email saying you have to join us, otherwise, and be our employees. Otherwise, you can't be in our hospitals anymore. So um, I was in a situation where I found a total my everything kind of changed, and I got like really sort of panicked, like, oh my gosh, now that I'm part of this sort of corporate structure, at any time there could be a new CEO, a new vice president of this or vice president of that. They could decide, you know, the doctors have to see more patients, work more hours, get paid, whatever it is. My whole life all of a sudden was in the hands of a group of people at a corporate office that didn't necessarily, I mean, they're not bad people. It's just the structure, is that they're not necessarily focused on my personal well-being. How could they be? And I started to think, I said,
Right.
and then I thought about it. I've been saving money. I always live beneath my means. I've never been an extravagant spender. So I was always saving money. And I realized, well, when I give all my money to a mutual fund or an index fund, it's like, well, now I have sort of all these big business corporate structures that are determining kind of what happens with my future. And I'm at the whim of the stock market. I'm at the whim of this corporation or that corporation. I just felt like a total loss of self-direction and a self-determination. And I didn't like that. I didn't like that feeling. So I said, okay, I want to try to like take control. And I started learning about real estate investing because it was the sort of investment avenue that I understood. Like, I had bought a house for myself before. I liked the idea of having an investment vehicle where there was a tangible asset. Like, I didn't like the idea of things like cryptocurrency or even just sort of trading stocks because, every stock is a different research project. If you really want to be a great investor, you really got to know the business ins and
Yeah.
outs. So you have to do a different research project for each stock. And so I didn't have time, or I wasn't really interested in that. But I understood a house. Like, I understood renting. I'd done that before. I'd rented houses. I'd bought houses for myself. I said, I think I can figure this out. And I started doing a deep dive. I did the kind of the traditional model. I went to Bigger Pockets and I took a home equity loan
Okay.
and I started buying Burr properties. And I saw sort of the limitations of the Burr investing model, which is the time, one time, right? You have to wait a while, 6 to 12 months before you can, get your loan out. And then the interest rates are very high. I didn't choose the best time to get into real estate. It's funny, like anybody who invested in, whatever, between 2015 and 2021 was like a genius, right? Like it was hard not to be a genius in real estate. Like
Right.
here's my investment plan. I'm going to pick a time when we have like record low interest rates and record high appreciation, right? And then I'm going to tell you, I'm going to do a podcast about what like a genius I am because I acquire all these properties, right? So why don't we say, like, I
Right.
want to find somebody who pulled this off, in when we had record high interest rates, right, and stuff like that. So and the houses had already appreciated and were record high housing prices. So I realized that there was going to be a limitation to sort of how I could get to the goal. And my ultimate goal was self-control, which means I wanted to continue working in my job because I love my job, but I wanted to be able to have enough sort of passive income or real estate's not really passive, like semi-passive income. I consider it like semi-passive, where if I wanted to cut back, spend more time doing what my family, all that stuff, and I wanted to be able to say like F you if they told me I got to do something I didn't want to do. I said if I need to get to that point, I
Mm-hmm.
needed to find sort of a new avenue. That's when I heard Pace Morby on a podcast, and I heard him, and it was just like light bulbs were going off. Like, listen, this is sort of the answer because I was struggling to get into houses because of the cost and the interest rates. I said, well, I need to find a way to get into a house with a lower interest rate, and the way to do that was through creative finance. And so I
Right.
continued to acquire. Go
So
ahead. Sorry.
when did you actually start? When did you actually start acquiring
I think
properties?
it was
You did it
it was
before
like
SubTo then.
December, January 2022, 2023. So it's been like
Okay.
almost 2 years will be at the end of a year and 3/4.
Right. So, but you did it before
Yeah, I
SubTo, right?
started
You
before
you
SubTo. I
were
started in I got 2 houses in Detroit where sort of the price rent ratios were sort of amenable to, you know, not having to put all my money into one investment. And
okay.
so I got to the point where I sort of used up my capital and then I got some business coaching and um, I decided so that I hired somebody, an operations manager. Now my strategy has been to connect with wholesalers. So wholesalers send me deals, and then I'm connecting with private capital because I really like the idea. I really want to help. There's a lot of people that felt like I do. They're in the situation I was 2 years ago. This sort of sense of loss of control, and they want to get into maybe real estate investing, but they don't know what to do. They don't know where to start. They don't know how to get going. It's a little overwhelming, or they just want to diversify their income, their investments, right? Like, maybe they have a little money saved for the future in the stock market, but the stock market can go up and down. They want something to kind of diversify and risk mitigate, right? And
Okay.
so I'm helping those people. So that what they'll do is they'll be a private money lender or a private money partner. I just helped she's a single mom in Denver. She wanted to learn about creative finance, getting houses. So she invested in a house, and we're splitting it 50-50. It's a co-living house we closed on a couple weeks ago. And then I have another doctor friend who's going to be a private money lender. He wanted to diversify his investments and get a return that's higher than he was getting just from sort of a regular mutual fund index fund, that he doesn't need the money now. And so he's getting, diversifying his investments. He's getting a higher return. Everybody wins. And so I'm trying to use these deals as a means to help people sort of get back control over their sort of investments, their future. And then a lot of people, they're going to invest with us, me and the team I'm building, and maybe they don't know anything about it, but they want to learn. So in the process of becoming like
Okay.
an equity partner or a private money lender with us, they're going to see all the steps of the way, right? So this woman
All
who's
right.
helping in the Denver house, I mean, she's on every email, she's on every text. She's going to see how, all the things that you have to do to get something set up. And a lot of times there's a lot of things where you can understand a concept, right? You understand how things work, but there's this gap, I think, that most people experience between I know it's the right thing to do and actually doing it. And sometimes if you just
Yeah.
partner with somebody, like, partner with me, and then we'll bridge that gap on a deal together, and then you can take it from there on your own. You know what I mean?
Well, I might take you up on that offer. I might
Sure.
have to do
Yeah,
that
yeah.
because I'm still. So when did you actually find SubTo then?
So that was February. It was like February of 2023. February, like the end of February. Yeah.
Okay. So is that when you joined in
Yeah. Like,
February
I think it was
2023?
like
So you've
the
been
very
in
end
a
of
little.
February, the very beginning of March, around then. Yeah.
All right. So how many have you acquired since? How many deals have you done since you've
So
joined?
so I have now acquired, with the Lord's help, 9 houses in the last year and a half. And so,
Okay.
so that's the blessing we've had, and they're all in various states of array and disarray. The earlier ones, I made all the mistakes on them that I'm learning to fix, which is an important
Mm-hmm.
life lesson.
So, so is that your plan? Is to buy and hold? Are you buying, holding, fixing, and
Yeah, I'm
flipping,
only
or
buying and holding.
like me?
That's my plan.
Okay.
Because, like I said, I'm very lucky that I have my job. It's a good job, and so I don't need the income now. Um,
Mm-hmm.
I'm not like stressed for the income now, and so I'm able to say, okay, I'm going to hold
So
off on the present cash for the future benefits. Which anybody who really, like, if you really study wealth building in real estate, equity is how you really build real estate, right? Wealth in real estate, like,
mm-hmm.
it's amazing, so the the return on a house, I there's so you're studying in business, right? Like in school, like, so the most important thing that you can understand, there's one, I think, equation that you have to understand, one math equation, which you don't even have to know, you just have to know how to look it up, right? Is the future value equation. So the future value equation is the math
Mm-hmm.
equation for compound interest. It tells you how much money you'll make at a certain interest rate in a certain period of time. So, if you invest $100 and you make 10%, at the end of the year you have $110. Well, at the end of next year you have
Right.
10%, but it's 10% of not $100, it's 10% of $110. So now you made $11. The next year so now you have $121, and it keeps compounding. Well, you can apply the
Mm-hmm.
same principle to a house, and you can estimate the value of the house in the future. If you can say, okay,
Right.
well, if the house, I always use, for the most part, an appreciation rate of 4% annually, and 4% is like the national average ever since
Okay.
they've been collecting data. So it's a very conservative number. I think in the house a house in Denver I did 6%, just because it's in a really, really good city in a really good part of town. But for the most part, you can say, okay, you plug in the numbers, you say compounding annually 4% in 1 year, the house is starting value now, it should be worth X in 10 years. That's what I would get at sale. And then you can go to an amortization table, which tells you what the loan balance will be in 10 years. Okay.
Okay.
And then the difference between those two is your equity. And you can estimate your return, and it's usually 2 to 3 times what you would get from an index fund at 8 to 10%. So you actually, returns are much better. And even if you do as an equity partner, where you split the equity 50-50, the return is still 1.5 to 2 times what you would get with that same. Because I use they call it the cost of capital, which is essentially the
Mm-hmm.
opportunity cost, which means that, well, you can invest your money with me, but by investing with me, you're not investing it in the stock market. So you're risking, that's your loss. So, if you look at, most people make about 8 to 10% in index funds and mutual funds. So you say, okay, that's the benchmark. I need to beat that for you. That's my goal. And if I can beat
Right.
that for you, then it's a good investment.
Right. All right. So I got to ask you, but you, all right. I see,
Yeah.
again, we're going to go back a little bit. I see you, long doctor. You're busy as shit all week long. How are you? And then you decide to start real
Right.
estate investing. How are you juggling all this? How are you juggling this with your family?
So,
'Cause-
I think that people don't realize how much they can accomplish in a day. So I gave up, so I have some advantages. One is I don't have a television, and I don't scroll on social media. So my goal with social media is to be a producer, not a consumer. Because all the coaching I've had is that social media is important to get people to know what I'm up to. But I'm not scrolling on social
Mhm.
media. It's a for me, it's not just a time suck. It's like a motivation, energy kind of suck, and it just sucks,
It
right?
sucks everything.
Right. And so I
It-
can, so then I take that. And the second thing is that I find times during the day. There's times. So my job, if I'm working in the ICU, it's usually not. Sometimes it is. It's not like 12 straight hours of nonstop. There's usually downtime here, downtime there. So So I have my to-do list that I can get done. And so if I have a downtime and I'm like, what should I do? I don't have that experience because I made my to-do list and it's like, okay, I got 30 minutes. Now I'm going to do this and I'm going to do this. And then I'll just fill in between the day, you know, and you could do, if you really kind of focus 30 minutes here, 20 minutes there, and you're sort of intentional and focused on the actions that you take, I think it doesn't matter what you're talking about, right? You can learn a lot of things. You can learn a lot of things. You can do a lot of things, right? That doesn't have to be with business. Like you want to learn
Yeah.
a language, you want to, you know, get a degree on the side. Like you can, there's a lot of things that you can, you know, that you can accomplish if you, you know, if you make those steps. The problem I think people have is we live in a society which brainwashes us that things come easy and naturally, right? So like the people that are on the TVs or the social media, they make it look very easy, but you don't see that for 10 years they were, right? So I think that success comes from consistency with a long time horizon.
Right. Now, social media is, I think, shorten that because people will see that and then they see you're, oh, he's already successful. They'll start following
Right.
you know, and then they'll start, oh, I gotta, this guy's successful, so I
Right.
gotta follow him. And I think it builds because I was talking when I interviewed Pace, he was telling me I thought SubTo and the community and his Facebook group were a lot older than they were, and they're only
Right.
like 4 years old. And I was like, "Are you kidding me?" And he's like, "No, it's only 4 years old." He's been in real estate investing
Right.
for
So
ten or
he
just
didn't
over
just start with I mean, he did, like, he was a contractor for a long time, and then he was doing
right.
things that nobody was doing. Like he was like posting his life on Instagram like every day. Plus the fact that the dude is like,
Mhm.
he's a machine and he's a genius with his ability to make these kind of things happen. Like he sees, he has this, he's like a genius visionary in his ability to see where things are
Yeah,
going, right?
yeah, he has an
But
amazing
he's like, I
insight
guarantee
on
you
people.
that you look at Pace Morby on a YouTube, and he would tell you the same thing, is that you're not seeing that for 10 years he was building to that point. He didn't start out, right, and like start his YouTube channel and start posting videos like on day one. He was building up to that, and I think you'll probably find that with most people, right? I mean, that are successful. But because the
Right,
society only sort of like forces down your throat the end product, it makes it look like it was something that happened magically and easily.
right. No, but he did blow up pretty quick. It did happen. Like if you were back in the 80s or
Sure, no,
trying
no,
to do
right, yeah, yeah,
this,
for
you
sure,
wouldn't
for
be
sure. Social media does accelerate a
so
lot. The internet accelerates a lot of these things. I mean, just like this interaction right now, like I would not. This is not something that would have been possible, right?
no, maybe we could have done an AM radio
I
broadcast.
don't even remember. I don't even know what we were done. It wasn't even something you would think about. Although the nice thing about being my age
No, not really,
is that
because
I
you
did
didn't
all
have
my
to
embarrassing
meet.
things before the internet. So
Right. So I got
I'm
to ask, how old are
47.
you? 47. All right. So you're up
Yeah.
there close to us or close to me.
Yeah,
I'm
yeah. So
53. So
I get it. Like I understand. You know, I said I did my embarrassing things before the internet. There are embarrassing pictures of me in the fraternity house, but they're probably moldy or they've like decayed. They're not on a Chinese server farm waiting for somebody to blackmail me in the future, right? You know.
right. All right. So now I got to get back. You had mentioned one thing. You did hire a business
Jesse
coach. Who is
Stanton. Everybody
the
should
business
look up
coach?
Jesse Stanton in the Growth Co.
I
Yeah,
thought of
he was
okay.
very, yeah, he completely changed sort of my vision and how things should go from, because I got to the point where I didn't know sort of where to go next. Like I'd done it on my own. Like I had this like I'm going to take care of everything myself mentality because I was
Right.
able to make things happen on my own. I've always been an action taker. Um, but it kind of sort of redirected my focus on having bigger goals and then how to sort of build a team more than just try to do it on my own.
Okay. So are you still with
Yeah,
him?
so I mean, you know, I'm still part of the community. It was a coaching like program, but yeah, I meet with him regularly for sure. Yeah.